Hello everyone from Chicago. I'm Charles Brown, Portfolio Manager with CB3 Financial, and this is your Daily 5 on StockCharts TV. We're glad you're with us. This program is called Portfolio Management with RRG. I'm a huge proponent of Julius de Campanar's RRGs, and I think you will be too. If you continue to watch our program, it really is an outstanding advisement tool. So we are a fee-based registered investment advisor here in Chicagoland, basically a family office. We trade our own accounts and select clients who like to follow our methodologies. You can find us at cb3financial.com, and if you look at the top, I've yellowed in links to our YouTube page and other things of interest. So let's get right on it. The Nasdaq finished today for the year now up 27.3%, S&P up 6.7%. Dow Jones tried to get into positive territory, couldn't quite do it. Russell still down 2.5% for the year. The gulf between the Nasdaq and the Russell is still enormous, just under 30%. And that makes it really tough if you're trying to work on a small cap strategy. But if you're using RRGs for relative strength, you wouldn't be doing that. So our benchmark program, CG, we call it, capital growth, is up. It just ticked 40% for the year, 40% for the year. This program is about making money in StockCharts, and I make money with RRGs, and I want to share that with you as I do from week to week. So this is a 14-year chart of NDX. So the NDX is the Nasdaq 100, obviously. I use this just to see where we are when we're considering making portfolio changes. We are well above all moving averages, up near the top, pulled back just a little bit from the September 2nd high. But if I'm wondering if I need to be bullish, the answer is I'm 100% bullish. And in fact, we have been 100% bullish for more than a year and a half. We had this little dip back in 2019, we lightened up a little bit and then fully loaded since then. Fully loaded for us means 99% invested in individual equities in our program using the RRG methodology. So the reason we use NDX, if you look at these four indices, so you'll see the yellow there, you can see this is basically just the last several months since the COVID-19 recovery. So you can see, actually, look at the green highlight on the left-hand side. Love this about StockCharts where I can just see so much data on one screen. But you'll see that actually IWM has outperformed NDX. Now, you won't see that in the news or even on other technical programs because most of them are looking at a longer time frame. But I'm always wanting to know if we are remaining in a secular bull market, which I believe that we are. One of my favorite technicians, Tom Boley, is a part of StockCharts. And he's just given me lots of great ideas here to follow. But I think we are in a secular bull market and we trade accordingly. So even though we primarily invest in high-tech stocks, we're following all the major asset classes because we want them all to participate, even on a certain day that, or even week or so, that we're not participating with them. For this secular bull to continue, we need all of the asset classes participating. So this is just 6 months, all right? So 6 months, you can see, again, that the Russell is keeping up with the Nasdaq, actually crosses over here the last little bit. If you go back a year, clearly the Nasdaq is what we're using as our benchmark. Now, when I say that, again, as a money manager, this is about making money and managing money for clients. We use the S&P on the external accounts, so we're monitoring our client accounts versus the S&P because they don't really know about these indices, but or they may not know about them, but they don't pay much attention to them. But as far as our internal benchmark, we continue to use the Nasdaq, even though the Russell here in just the last few days has crossed over for this short-term period. Again, I love seeing all the asset classes participating in a big move. So moving forward, we're going to look at the RRG Weekly, and so the benchmark is the SPX. IWM is the Russell 2000, DIA, of course, the Dow, WD is value, and IWF down here in the weakening quadrant, but still farthest on the RS ratio, tells me that growth stocks are still in control, even though small caps are making an imprint there. So I need to be paying attention to that. But because they have floundered so badly for so long, I'm not jumping into small cap as far as making asset allocation changes. If I look on the daily chart, it's even more aggressive for IWM. You can see it there in the upper right-hand corner. I mean, it's just off the chart. Literally, the circle's not even on the whole chart. IWF still very strong on the daily chart. The Dow and the value still down and weakening. I mean, it's a good time to be in the market, but you still want to go with the leaders if you want to consistently beat the S&P. And in my case, I want to consistently beat the Nasdaq. And I think when you see that 40% return versus the Nasdaq year to date at 30, you can see that we're doing that. The only way that I can do that is using RRGs to constantly check for relative strength. So let's look now at how the 11 sectors are doing versus the SPX. Well, in the last episode, you saw that I was getting interested in industrials, and indeed, they have strongly moved into the leading quadrant. See them there at the top, and yet they're still not as far on the RS ratio scale as consumer discretionary or even XLK, which is technology. So if you look carefully, you'll see XLK is hooking back up, and I like that. I like that XLK many times this year has weakened and then hooked back up to what I think will be a re-entry into the leading quadrant. So we are interested right now in, even though XLB is there, I didn't highlight it, materials are a relatively small sector, and it's just not a place I put a lot of money. We do have SLV, which is silver, in one of our programs. We're not trading gold right now, and no other material stocks to speak of, but we're focusing on consumer discretionary, technology, again, based on the strength that I see here, and then now taking a nibble into some industrials. So how do we do this? Well, we'll drill down into the XLK constituents, and you can see highlighted in green here are holdings that we have in our CG program. Now, we'll stay in these until they move significantly into lagging. If you look carefully, you'll see KLAC has just crossed the line, but it's arcing back up. So I think KLAC is not a sell for me. It's going to be a hold, again, because I know RRGs enough to know that this could well hook back up, maybe go through improving, or maybe just hook right back up and head back into leading. So we're holding on everything there in that sector. Let's look at the consumer discretionary constituents. We've got Starbucks, Amazon weakening a little bit, eBay, Chipotle. But overall, we like our discretionary holdings. Been in and out of McDonald's and Nike, not holding them right now. Target kind of got away from me. We've had that, on and off many times, but we'll come back to that, I'm sure. This is really, really helpful for me to be able to look at just a few charts. Obviously, I spend more than the 10 minutes I'm spending with you here now, but we like looking at these RRGs so that I can really get an almost instant representation of what's going on in the market. So when you add all this up, there's the 40% that I talked about, and we're getting that return using the StockCharts technology with the RRGs, with a 45% weight in technology, a 27% weight in consumer discretionary, a 9% weight in industrials, and it was less than that during my last program, so that's been a change that we've made since I've seen you last. 6% in communication services, and then we do have a few what I call stellar performers in a few of the weaker sectors, but you can see people say you need to be diversified. Well, diversified is worsified in our book. We really only have significant exposure in 2 sectors and then decent exposure in 2 more, but after that, it gets pretty thin. We'll never be in all 11 sectors because, again, if we're using RRGs to show us relative performance, it just doesn't make any sense to do that. So that's where we are today in our program. You guys can find me at CB3 Financial. Subscribe to us on YouTube. I do tweet every single day, sometimes twice a day. We have a weekly program on Monday night and Thursday night. Join us this Thursday night because we got some great topics we're going to cover. Thanks for being part of this, guys. We will see you next time on Your Daily 5. I'm Charles Brown, Portfolio Manager with CB3 Financial, where we don't just manage your assets, we become one of them.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.